Institute, as well as Dr. Belesha Veeratna, Head, Migration and Urbanization Research, IPS. Let's start off tonight's show with Dr. Roshan Pereira, former Director, Risk Management Department, Central Bank of Sri Lanka. Dr. Roshan, everyone is aware that we are in debt. Sri Lanka is in a crisis situation at present. How badly are we affected at present? How bad is the situation? Does this mean that we are heading towards bankruptcy? Your time starts now.
So I think everybody talks about the debt to GDP ratio and that being a very high number. But I think what is relevant to look at is actually to look at the debt service to the revenue number. And if you look at that, we find that our interest payments to revenue is something like 60% of our revenue, which means that we are out of the revenue that we earn, 60% of it goes to settle our interest payments. So that is something that is very high, higher than most countries. And that's really where the problem is. It's not necessarily that we have a large debt stock, but it's more in terms of the problems that we might be having in terms of servicing the debt. And that is why I think everybody talks about that sustainability issue, because if we are unable to service our debt, it could lead to other problems.
Dr. Pereira, the problem right now is you are well aware and quite cognizant about the fact that Moody's downgraded Sri Lanka just a couple of weeks ago, saying that Sri Lanka's debt sustainability is becoming very, very worrying to the world. What does this mean? So, in a sense, Moody's and all the rating agencies, they are basically do their ratings for their own investors. What they have said, by this downgrade, what they're basically implying is that Sri Lanka will have or they expect Sri Lanka to have a issue in terms of servicing its debt. But that doesn't necessarily mean that it is an eventuality. I think we need to look at more in terms of our own situation, and the policymakers need to sort of focus on our issue and see how we can get out of this problem, or how we can pay our debt stock or our debt. Do we have the money to repay these debts?
So one thing we have to realize is that all debt doesn't have to be repaid at once. There is a repayment schedule. Yes, we will find it challenging, but doesn't mean that it's impossible. There are ways and means in which we can do that. And I think there are many talk shows, many forums where this has been discussed, where there are other options and options available to Sri Lanka. The thing is, policymakers need to come together and need to look at these options. We can't be looking at maybe the traditional ways that we've tried to mitigate this debt. We need to look at other options. So I think one thing is that we need to look at maybe getting at a consortium of other of lenders. We need to look at the IMF. I mean, there are so many options available to us, and I think the policymakers need to be open to all those options. So I don't think it's impossible, but it's something that we really need to do, and we need to do it fast.
The International Monetary Fund, Dr. Pereira, has predominantly told Sri Lanka to get its tax regime straight. However, we know that when this government was elected to power a couple of years ago, the tax regime again went haywire, which was somewhat put on a particular format by the then Finance Minister, Mangala Samaravira. Right now, do you think the IMF will be prone to give Sri Lanka a loan or even a tranche of money to support Sri Lanka's economic crisis?
So the IMF really comes in at times like that. They're the kind of the lender of last resort to countries or to central banks, really.
But they come with strict regulations.
So in a sense, what they're trying to do is
it's a package. It's not it's like a bank. You go to a bank. The bank is not just going to give you money if you are in some kind of difficulty. You have to have some kind of restructuring as well. So they will put in a package where you are able to repay that debt that they are giving you. So it's similar with the IMF. The IMF is not just going to lend you money unless they know that you have a way in which you're going to be able to settle that debt, and not only that debt, their debt, but also the other obligations that you have. So it's a similar story. And so the IMF, when they come in, they try to put in a whole package. It's a holistic package. And in a sense, I think we always sort of put it on the IMF that, okay, they asked us to do these things. But in a sense, these are some things that we already know. And I think economists within the country have also talked about some of these reforms that we need, particularly on the fiscal. Right. So I think it's sort of unfair to only blame it on the IMF. I think it's something that we all know as economists that need to be done.
Thank you very much, Dr. Roshan Pereira, former Director, Risk Management Department, Central Bank of Sri Lanka. I now move my attention to Murtaza Jafarji, Chairman of the Advocata Institute. Murtaza, you may think that I'm going to ask you about the country's economy first, but my question is directed to you regarding the activity at the Colombo stock market. The World Bank, the ADB, the Central Bank has given minus growth projections for Sri Lanka for this year. However, the Colombo stock market remarkably is doing well. Now the question is, are the Barbarians who were active at the Colombo stock market in the year 2011 to 2013 period, where there was a significant bubble, are these individuals operating once again in the Colombo stock market to create a bubble and show a very different picture, a very optimistic picture about the country's economy? Your time starts now.
So I'm not sure with regard to the question that you're asking whether those same people who were active in that previous decade are responsible for the current buoyancy in the market. But there are some fundamental reasons also going on, that markets are about expectations. And if you look at what drives it, like water drives a turbine, it is liquidity that drives the stock exchange. So just 6 months ago, a fixed deposit interest rate was 9%, sometimes even 10%. Today, at the margin, if you keep your money with a bank, you will probably get 5%. And the total stock of deposits in the banking system is in the order of 8 to 9 trillion. So at the margin, you don't need a lot of money that shifts from one form of savings, be it bank savings, to shift to an alternate like the stock market. And it is the shift which has been happening over the last 6 months that has created the liquidity flow that has created buoyancy in the market. The second issue is that there are COVID winners and COVID losers, and the reporting season is upon us, and we have seen some companies posting record profits. For example, the company Expo Lanka in 2 quarters, last year they made a loss. In the first 2 quarters this year, they have posted a record profit of 6 billion, which is 3 times more than the highest profit that they have ever recorded. Now this is an anomaly. You also have other companies like Dip Products who have seen their top line grow by 50%, and there are food companies even in categories like ice cream where volume growth in the quarter that they are reporting on has been in excess of 20% growth. So some of the activity that you are seeing is also fundamentally driven because these companies are posting very strong earnings, and I would put them in the category of COVID winners. But at the same time, you have COVID losers, and the obvious COVID losers are the hotel industry. And some of the companies that have reported basically are also recording historically record losses, because it has been obviously the sector that has got affected the most. The largest sector in the market is the financial sector, the banks and the finance companies, and they have all not reported, and it is next week that you will see them all report before next Friday. I'm afraid that there, because of moratoriums etc., the true picture will not be revealed, but that segment has not been buoyant in the market. The breadth of the market is very large, 38,000 to 40,000 transactions, and I believe, I don't have the exact statistics, that there are almost 10,000 active investors. And even myself running a brokerage, we have seen increasing interest of new investors wanting to open accounts with relatively small amounts of money, less than 1 million rupees.
So, Murtaza, for those who are watching the show tonight, is it prudent for someone to invest in the stock market given the current condition?
So I have said this before, and I realize that I'm on live television. My sense is, I think this is a 7 innings match, and we probably be in innings number 4. So we have a few more innings to go. And what would innings 5 look like? Innings 5 will look like when the IPO boom starts. So when you have a buoyant market like this, where there's a lot of demand coming and a relatively restricted supply, you will see new supply coming. So one way is that you will see companies trying to come to the market and raise capital. You will also see new companies that will come in. So when you look at the alternative and the fact that Sri Lankan households are massively under-owned in equities, if they stick to some of the more fundamentally sound consumer companies and invest 70% of whatever they want to invest in those counters, I would say still they will be on a relatively safe ground.
So you say it's a 7-inning match as far as the stock market is concerned. Now we're in the
That's
4th
my
innings.
metaphor.
Yeah, so now we're in the 4th inning, and the 5th inning is going to be when the IPOs open up and so on and so forth. Where is the 6th and the 7th inning? Where are we standing?
So 7th innings is when your taxi driver tries to give you tips on the stock market, and the 6th innings is probably when the slightly lower quality companies, highly questionable companies, start getting listed. So you will probably see more quality companies coming on the 5th innings, and I am suspecting that you're going to see a lot of these new age digital, more startup oriented companies coming and getting a listing, and it will be healthy because these are companies that need to raise capital for growth.
Very quickly, Murtaza, I also want to ask you about the country's economy as well, because you are now the chairman of Advocata Institute. What is your take on the country's economy? Are you worried?
I am extremely worried because 50 to 20% of the economy is seriously affected by the ongoing COVID-19 health epidemic. I also happen to be an independent director of a hotel company, so I have some visibility of what is happening in that sector. Now, some of the hotels have benefited from the quarantine business, but a lot of them is distressed, and it represents about 2.5% of GDP. There's a large amount of something like 2.5% of bank debt went into that sector. And then even sectors like education, which has a big ecosystem, probably account for more of GDP than even the hotel sector. This is all distressed. The schools are closed, the transportation is closed, the entire ecosystem around education, tuition, etc. all shut down. And then you have the other industries that have got affected because of the controls that have been put in place, like import controls. So the entire car importing sector has completely come to a standstill, and that has, although it's an imported item, it has a big multiplier subsequent to imports in terms of insurance, financing, servicing. So there's a lot of segments that have got affected and incomes have been affected, and you have the secondary effects that those people who have got affected, their demand has gone down, which is affecting other companies. And we have the debt stock, which is the elephant in the room, is our debt sovereignty issue, which is going to come to bite us.
When will it bite us?
So my sense is that I feel Sri Lanka has a solvency issue. The policymakers are addressing the problem as if we have a liquidity crisis in Sri Lanka. So as long as you can find one set of creditors to pay off another set of creditors, you can keep postponing the problem, or what is called kicking the can down the road. But one day there will be a limit how far you can kick this can down the road, and I would think that sometime next year is the day of reckoning will probably dawn on us.
And that time it will be too late.
Well, it will be more painful. So the trade-off is, do we engineer a soft landing or do we face a hard landing? That is the debate in the room.
Thank you very much, Murtaza Jafarji, Chairman of Advocata Institute. We now move our attention to Jayanta Karunaratne, Vice President of the National Chamber of Exporters, as well as the Chairman of the Colombo Tea Traders Association. Jayanta, interestingly, Murtaza said there are some COVID winners as well as some COVID losers. And if you look at the country's economy at present, the exporters are the section or the sphere that has brought in that foreign remittances to the country in the last few months. Do you agree or disagree?
No, I agree. You know, if you look at the last 9 months or 10 months, the export turnover is almost the same as the previous year. So most of the exports, the all industries like apparels or tea or rubber or other industries, we have very close to last year figures. So, you know, with regard to exports, I think we will reach the exports or products by about $10 billion or maybe more. So, exports have done fairly well in the sense under the current circumstances. We have problems overseas. You know, most of our markets are not doing well, or apparels or tea, or all our markets are not doing well. And also locally, we have a problem. You know, we have a problem of working, you know, restricted hours, restricted people. So with all that, exports have earned this almost the same amount of money this year compared to the previous year.
So Jayanta, it's quite too early to speak about the effects of the Minuangura cluster or the Brandix cluster. However, we can of course forecast as to what will happen in the next few months. We are quite aware right now as we speak that the garment industry is going to be one of the hard hit industries as far as the exports are concerned. However, there was a glimmer of hope a few months ago until the Brandix cluster came into play. What do you envisage in the next few months?
Actually, now that was an unfortunate incident. You know, I think we all have learned, the exporters or factories have learned how to manage. So, you know, after that, you know, the exporters are working with all precautions taking. So I think we can manage, you know, like not only those health guidelines are followed, you know, maybe people give other things like things like vitamins to workers to improve their immunity. So, you know, these things happen now. So people are getting used to work under the current system. So I don't think we will have a serious problem within the next...
Jayanta, I remember when the first wave happened, I interviewed you on Newsfirst and we spoke about supply chain issues. Despite the fact that exporters are given the green light by the government to work, the supply chain has come to a complete standstill. Is it the same scenario even now as we speak, or has that improved for the better?
No, compared to last time, you know, there was a total, stoppage, or they could not work. But this time, this has not happened. You know, they work. But import restrictions affect us. You know, there are certain items which are needed for re-export are controlled or, you know, are difficult to be imported. So those has a problem, you know, to the exporters. But the local manufacturers, they continue to work, though there are little delays. But I don't think there is a major problem with regard to local supply.
Are you trying to say that the government's intention to strengthen the Sri Lankan rupee by controlling imports is not healthy for the exporters?
You know, it is to some extent the Sri Lanka need to control imports, unnecessary imports, which is, we feel that we have to control that because of the current, the issues. But at least there are certain items which are needed to be imported for our manufacture and for re-exports. Those, and also not only the items, the machinery and things like that. So there are problems with regard to that. So we take, to take up these things with the authorities. But that has to be, we need some kind of a support from the government.
But we are well aware, during 1972 to 77, when Dr. N.M. Pereira, who is revered as one of the greatest economists that Sri Lanka ever produced, he too went on this premise of forcing to stop imports to Sri Lanka and only exporting, and that also worked in favor of Sri Lanka when J.R. Jayawardene took office in 1977. So he was able to open the country's economy and then give the width and breadth as far as exports and imports were concerned. So are you trying to say that this is not the way to move about?
I think some control of imports are needed, but they need to relax certain items which are needed for re-export, and the total ban of imports is
now the
not
government
helping.
has banned the importation of turmeric.
I think it's a product which can be grown here. So I personally feel, or maybe our chamber believe, that this can be done here. So you don't need 100% to import so much of those things like fruits and vegetables.
But not a complete ban. It can
Yes.
happen in stages. Is that what you're trying to say?
I think certain items, we have to have a time, period for total ban. But certain items, we must encourage people to manufacture it here. But certain items, we need to, certain items, for the industries we import, those has to be imported.
Jayanta, when you're speaking, you speak with a bit of agony in your voice. Is it because the government is not favoring the exporters as you expect they should be favoring at present, because they are the ones who are bringing in the foreign exchange to the country at present, along with the migrants?
We have problems. Not that I don't say we don't have problems. We have problems, with regard to the finances, control of imports, restrictions to work. We have problems. We manage them, but we hope it's a period of time. Maybe it'll it's not this what we were doing last year. So we have a much difficult task to handle, but I think we can manage. So I think the government should look at us in a more supportive manner than but I feel they are doing their best to help us. But at the same time, I think we should get a little more support from them to do more exports from us. We can do better, definitely.
Thank you very much. Jayanta Karanath, the Vice President of the National Chamber of Exporters, as well as the Chairman of the Colombo Tea Traders Association. I now move my attention to Dr. Bilesha Veeraratna, Head, Migration and Urbanization Research at the Institute of Policy Studies. Dr. Bilesha, a few months ago you were sitting on this very chair, on this very show, and then you said it's a very bleak picture as far as migrant remittances are concerned. There is a dip of 32%. Sri Lanka will not recover from this mess at present, and the government really has to take full charge and do something about it. However, now the figures are out for the month of September. Over $700 million recorded in foreign remittances in the month of September, the highest monthly figure since 2011. What happened to your prediction, Bilesha?
There are two parts to the answer, Shamir.
Yeah.
One is, in April, the World Bank predicted a 19% decrease in remittances to Sri Lanka. The World Bank, okay? And then in October, a couple of weeks back, World Bank revised that prediction and said the remittances will go down in Sri Lanka by about 9%. What happened is the second part of the answer. So, based on, do you have another part?
No, you can.
Okay.
You can
So the initial predictions, mine as well as the World Bank, was based on how things were going, based on official numbers. But now it seems like the official numbers are starting to capture the informal remittances that have been taking place throughout the system. Why? Because many of the markets, where the migrant workers are in, have been locked down, like in the Middle East. And so in Sri Lanka also, where the remittances come into, were under lockdown situation. So these informal remittance markets work in a way where foreign exchange does not cross the borders, the geographic borders. But there is a network of people who might collect money from the migrant workers in the country of destination, and they will contact their network back in Sri Lanka and say, okay, you have to give 40,000 to this person's mother.
and that person will go
Something
and
very
give.
similar to the Undial system.
Exactly, yes.
Right, okay.
I was not using the word but explaining it.
Yeah.
So, when there's a lockdown and when there's a lot of uncertainty going on, the risk involved in the informal sector goes up. The shops are closed. There is no cash flow, much cash flow with these informal remittance service providers in the countries of destination of migrant workers as well as in Sri Lanka. So the migrant workers might have started to consider about the risk factor involved in these informal channels, whether if I give it to an informal remittance provider, will it really go back to my household, will it go to my mother?
Yeah, but my question now is to you, Dr. Bilesha, the numbers don't add up for some reason. Approximately around 30 to 35,000 people are waiting to go overseas to find employment. There are approximately over 50 to 100,000 people who want to come back to Sri Lanka. There are many thousands who are stranded in the country who have lost their job opportunities. However, Sri Lanka here records 700 million, and you speak about informal remittances. Money laundering?
I only say informal remittances. I don't know beyond that. Remittances are informal. So as far as I see it, it might have been earned in a formal way, like doing a proper job and getting a wage, but the money is not transferred to Sri Lanka through a person who has a license to remit money to Sri Lanka. Those are informal people. How you earned your money leads to whether it's money laundering or not, that I don't want to touch, but the remittance part can be called formal or informal. But my previous part is that
So right now, sorry, yeah, you can continue.
so this is not only happening in Sri Lanka.
Yeah.
This has been noticed in many of the South Asian countries as well. In fact, the new World Bank projection for Pakistan and Bangladesh actually shows a growth in remittances for 2020 in contrast to the previous prediction. So between World Bank and my prediction between April and October, a few things happened. One is that the Sri Lankan government offered many concessions or many attractive offers for remittances to come into the country. So it looks like it's not the normal migrant worker who has been regularly sending to the tune of 40,000 rupees a month is sending now and contributing to this bumping up of the remittances. I feel there is a new stock of a new clientele of remitters. I don't know whether they are migrant workers, permanent migrants, diaspora, or parties interested in Sri Lanka, or well-wishers, we don't know who, but there's a new set of remitters sending money to Sri Lanka. Most likely it could be that they're trying to benefit from these new offers provided, like the special deposit account, which was declared somewhere in April, if I'm not mistaken, saying that no questions will be asked and money can be sent to Sri Lanka. So,
No questions can be asked, money can be sent to Sri Lanka. Doesn't this raise a red flag?
I'm not going to answer whether it raises a red flag or not. There are authorities to justify that. Maybe they had a reason to do that. Maybe they don't. You don't see a reason. So it is debatable.
How much of money can someone who's working overseas send to Sri Lanka without any issue? Is it 40,000 US dollars?
Normally the average remittance, but then average remittance is about 40,000 rupees per month. But we have to understand that we have the composition of migrant workers is very
40,000
different.
rupees or $40,000?
40,000 rupees per month.
40,000 rupees per month. Okay.
Yes. So this is basically because we have about 55% of our migrant worker departures per year comprises of low skilled and female domestic workers.
That's right.
So they might be pulling the average down, but the high skilled or better skilled people might be able to send more, but because of the big stock of lower skilled workers, the average might be pulled down. So other people might be sending much higher than the 40,000 average.
What will happen in the next 3 months, Bidesha, in terms of foreign remittances? We see in September the number at an all-time high since 2011. Come October, November, December, which is the season as far as Christmas and the New Year and so on and so forth is concerned, do you think the numbers will rise further, or will it stagnate at that number of 700 million US dollars?
I have a feeling it might stagnate because now after this decline up to April, from May onwards it has been going up gradually. from June it started showing a growth in terms of year on year as well as month on month. But then July also was an increase, but August was a little bit of a dip. Then September picked up again. So that I think shows a little bit of the stabilization trend around that figure. So as you said, the season might attract more remittances, and then again the current situation in the country and many people might be suffering without income, that also might draw a little bit more income. And then also, as we heard today, there is some hope that there is a vaccine, and that might create a positive economic environment in the countries of destination, and they might start hiring more. We never know, so things might change a little bit, and then it might pick up.
Thank you very much, Dr. Bilesha Veeratna, Head Migration and Urbanization Research at Institute of Policy Studies. I open the floor for questions from our journalists. On to my immediate right is Nadine Majid. On to my immediate left is Zeenat Musafa, as well as Shehan Ranathan, who is joining us after a very, very long time. What have you been up to, Shehan?
Plenty, lots of things.
So let's start off with Shehan and then move to Zeenat.
Thank you, Shamir. I'd like to pose my first question to Mr. Karunaratne. Sir, there are reports that the government is looking at lifting these import restrictions soon. Firstly, what information have you received in this regard? Can you agree? Do you believe this is true? And also, if I may follow that up with what impact? What has the impact been on the import restrictions so far?
I think we have heard this information because there are a lot of pressure on the government. It's affecting a lot of local businesses. So there is pressure on the government to remove those restrictions. So I think they will keep removing, those restrictions over a period of time. But that we have heard and we believe this will happen. I am not sure of the timing, but this has to happen. But with regard to because of controls, to the export sector, this has affected, some of the things. This year has been a bad year in the sense, for us. We could not do many things new. We are doing our usual things. We can't develop new products. We can't think of very long term. We are struggling to maintain our volumes. So, we have done it. The exporters have done it. So, but we have not been able to do many things for the future. So, but definitely, it's a minus for the export industry. So, it will improve our way of working for the future.
I believe the cabinet, not I believe, but in fact just about 2 weeks ago, cabinet had decided for two ministers to study and to draft a scientific criteria by which the import restrictions will be lifted. As several phases in which it's going to happen. Earlier you mentioned there are certain imports which are unnecessary, but then you also said that it affects the lack of raw materials, affects the exports. So it sounds like there's a communication problem here. So even when it comes to lifting the imports restrictions, what engagement has there been from the authorities with businesses in the industry?
It's a question, the trade, when you say export trade, we have, the entire, like the apparels or tea, there are certain items needed by us, which are not available here. And also, even if it's available here, those are expensive and not competitive for us to use them. And also quality issues. But, there's another local industries. So those people need many other things, people have got used to it during the last maybe 20-30 years. So now total ban of those is affecting their businesses, their maybe consumption and various other things. So I think we have to have a balance on this, not to, like he said, not to follow the system what Dr. N. did, but to have a more a balanced system where the country also should go forward, and we should believe in local manufacture, at the same time control unnecessary imports.
We depend heavily on Chinese imports. I think it was something like 19% in 2018. Similarly, around 19% from India. Now, But the situation where COVID is concerned in these countries is very serious. So how has that changed the thinking?
No, that was not because of COVID. I think the import controls came in because of those money going out of the country.
Yes.
So I think that was the criteria to control the money going out of the country, and also certain items can be imported with longer terms of credit. Some items needed by us. We cannot pay immediately or in advance. So it is not really related to COVID, but the money situation of the country, and the debt settlement, and the country needs money to manage for the moment.
If I can...
You want to pose another question?
To Mr. Jafferji?
Yeah, okay. Yes.
Mr. Jafferji, you spoke about COVID winners and COVID losers. COVID losers obviously are those who have lost a lot of jobs. There are people who have lost jobs, people whose incomes have been slashed. Ultimately, that's what matters to most of the viewers. You have so many people who are wondering what's going to happen next. How do I find a job? What am I going to do about my income? How do we, or this is a general question, how in your opinion, how do we recover from this? What would you say to the general viewer who's in this situation? What hope is there?
So I think human beings have always lived on hope, and it's up to leaders to keep hope alive. And I don't mean leaders necessarily who run countries, but also people who run businesses. And how to keep hope alive is to communicate to the people who are affected what you know and what you don't know. It's very clear that you can't make truth the casualty. Hope will not work. Second thing is to explain to them potential pathways, that if you can paint certain scenarios and say that if this outcome happens, this will probably come. So to give you a concrete example, I mean, I was chairing an audit committee this evening of a hotel company, and that was the time this news came about this Pfizer vaccine. And until that moment, the discussion was, how long will this crisis go on? Are we talking about 1st of July? Are we talking about 1st of October next year? And basically the discussion said is, would there be a possibility that you might have a return to some element of arrivals, foreign arrivals from 1st April or 1st March? And the Chinese basically have their own vaccine. And the Chinese New Year is coming in February, early February. So this is where basically you have to continue to communicate to those who are seriously affected how things are going, and you got to also figure out some element of sustenance, because those people right at the bottom, they will need some element of income support to keep themselves going. So the government has tried to give handouts to certain selected people, but it's also to do with the businesses itself, that they dip into their reserves, or they try to borrow money hoping for a better tomorrow and keeping some of their core staff at a sustenance level.
So, my question is to Mr. Jafferji. You spoke about the tourism sector. So, even if we control the second wave, there's always a possibility of a resurgence of COVID-19. So then the tourism sector will be affected again, and airports will be closed, so there won't be any air traffic. So, Mr. Jafferji, what do you propose as to how the tourism sector should face this issue?
So my sense is that until you find a successful vaccine and in large number of quantities, travel cannot resume. And for broad-based travel to return, IATA had said that a full recovery will probably take towards the end of 2023 or 2024. That's going to take a significant period of time. So in the ensuing period, it is about at least ensuring that the more productive, stronger businesses survive. See, the physical infrastructure out there is not going to get destroyed. It is just that a lot of firms and a lot of creditors are going to get wiped out. So, to be quite honest, we need to have the infrastructure and the legal framework to allow highly distressed businesses to come through some resolution framework. Now, I would guesstimate that something like 30% of the leisure sector businesses is probably heading towards bankruptcy. Before this crisis, they had some element of leverage, that there was an oversupply situation anyway in the country. And if they had a large amount of debt, although there are moratoriums after moratoriums, the debt is still piling on. Like the country, the debt is snowballing, basically. And you probably see that these businesses, although the interest rate has significantly been reduced and we have done moratoriums, it's going to be extremely difficult for these people to come out of this, earn their way out of this and settle the debt. So we need a robust legal framework basically to put these people in like a Chapter 11 bankruptcy and resolve them and get some of the creditors to take a haircut, so that when a better time comes, that this capacity can come back into national production. Because in the absence of this, all this will get caught up in the courts, because the creditors will be trying to take their money back basically, and then you are going to create a bigger stress situation.
Dr. Roshan, as a bureaucrat sort of on the panel, do you concur with Mr. Jafferji's views on where we could potentially see in the tourism and leisure sector 30% of bankruptcies, and that the policymakers need to start looking at potentially giving haircuts to creditors?
So I don't have the numbers in terms of the exact what the stress is in that particular sector, but I can imagine that in the entire economy itself, there are many sectors that are affected by this whole pandemic. And I mean, if you look at the borrowings, the bank borrowings, you can see that the banks are exposed to particular sectors, and the fact that the central bank gave the debt moratorium, it implies that a lot of these sectors are high leverage, or they have exposure to the banking sector. So definitely that needs to be addressed, because you can't just debt moratorium only, as Murtaza said earlier, basically it's only just going to kick the problem down the road. It's not going to address the issues in those sectors. So there really will need to be, so this is kind of the second phase. So I think in terms of our policy, what policymakers need to do, there are several phases. So first one is basically the immediate relief that they need to give the economy, make sure that it is kept relatively intact. So for households and businesses, so I think that is one area. In the second phase, which is now, I think we're coming towards that, there needs to be some kind of restructuring and repairing of the economy. And that's where I think this restructuring comes in. We've talked about this Chapter 11 type bankruptcy code. I think it was even in a draft stage, but we have not really it has not come through. I think in India they had a bankruptcy code, but it was also not very effective. There are even proposals to have a restructuring for entire sector. So that is also possible. You have a bankruptcy code in a sense covering an entire sector. And I think that is something that can be looked at in terms of this sector. So I definitely agree that we need to look at it, because otherwise what we're going to have is huge foreclosures like we had in other countries. Or
how are we going to deal with the I mean, if you do have, like Mr. Jafferji is talking about, let's say 30% of the industry goes under, declares bankruptcy. How do you deal with the unemployment fallout, the inevitable unemployment fallout from that? And also, Pilesha, after that, like your views, I mean, a lot of migrant workers, not just in the Middle East, but in other parts of the world as well, Sri Lankan migrant workers are in the travel and tourism sector as chefs and restaurateurs. They are coming back home now after being either furloughed or made redundant to an industry that no longer has jobs for them either. So what kind of policy steps can be taken to address these very pressing challenges?
So I think this is one area that Sri Lanka has not really looked at very carefully, and that's in terms of a social protection, sort of a universal social protection scheme. We have some welfare schemes. We have for very poor, we have the Samruddhi scheme, you have some other, ad hoc schemes. But we have not looked at a proper sort of a social protection scheme that covers all vulnerable groups. And I think this pandemic has really brought that out very clearly, that everybody is vulnerable at some point in time in their life cycle. And it is very important that we develop a social protection scheme that covers all this. So from childhood, you might be vulnerable as a child. You might lose a job at any time, as in this current situation. There might be health issues, you might become disabled. So, and then everybody gets old. So at that time, you really need to have some kind of protection scheme. So I think this is something that we need to talk about. I think there are some people who are actually working on the numbers. If you kind of take in all the welfare schemes that we're doing now and put them into something sort of a more comprehensive welfare scheme, it may not cost any more than what we are paying now. So I think these are some things that we really need to look at. Hopefully starting maybe in this budget or maybe.
Dinesha, I mean, I can provide anecdotal probably reports of people who had been working in the hospitality and tourism sector overseas as migrant workers who have been made redundant and have returned to the country, and their prospects back home aren't looking very well either. Do you have any data on what percentage of Sri Lankan migrant workers are actually in these what you call hard hit sectors or COVID loser sectors?
Unfortunately, we don't have any numbers to say what exact sectors they are, the returning migrants are, but the Sri Lanka Bureau of Foreign Employment has done a survey of returnees. The data is not out for me to access, so I'm sure the SLBFE might be knowing it. Before I touch on what to do and how to deal with these returnees, I just want to touch on what Roshan was telling about this social security. I think migrant workers and their families are at a very unique place where they fall through the cracks of the social security systems, both in Sri Lanka as well as the countries of destination, because most of our migrant workers are working in the Middle East, and in these countries there's very little protection, social protection or employment protection or favorable working conditions for migrant workers. So over there they are kind of not protected, and then they come back to Sri Lanka, and then while they are over there, the families of migrant workers are not covered by the standard social protection schemes like the Samruddhi, because they are disqualified the moment they say they have a migrant worker from their household who is overseas. So that is a disqualifying factor for the Samruddhi scheme. So that way they are not eligible, and this like the 5,000 cash handout that was given, initially they were not eligible. So now maybe they were not getting the remittances, and now there is no social protection over there or back in Sri Lanka. So, but later on there were some schemes developed where the Grama Niladhari was able to identify specific households and expand this coverage. But I think this social security has to be considered in a way where these people who are okay while the remittances are coming, but then suddenly when it stops, they just don't have anything, because out of we have about 1 in every 11 household receives remittances, but about 19% of these households don't have any other income. They totally depend on remittances. The moment remittances stop, they don't have anything, so then only these social security schemes have to kick in to take care of them, because remittances have been making a big contribution to the economy, like 8% of the GDP. So in terms of how and what to do with these returning migrants, one thing is you have to actively engage in reskilling or upskilling these migrant workers, to repurpose them, to provide them new opportunities, because now you were mentioning about the travel sector. Now these skills are not specific to the travel sector. Easily a chef can become a chef in a hospital or something like that. Maybe his passion is not there, but you can repurpose these things in a different way. It's a matter of doing it in a systematic way and understand where the future market is, future demand for migrant workers are.
I just want to get back to you on the elephant that you spoke about, the debt problem that we have. We are quite well aware that the multilateral agencies like the World Bank and the ADB, the interest rate stands at 2.62%. The World Bank interest rate stands at 1.38%. Compared to the 6.61% for commercial debt that Sri Lanka has been borrowing since 2005 to 2019. Despite that, the governments in power has shown a preference towards moving towards commercial debt and not multilateral debt. Why is this? What is the reason behind this?
So the first reason is that we are not eligible anymore to get these concessionary financing terms. Per capita GDP last year went above $4,000, and we've upgraded to a higher middle income country, although then we came down again because of the stress in the economy and the currency depreciation. So the short answer is that we are not eligible for that it would have been preferred.
Yeah, but we're just talking about the last 2 years where the per capita income was $4,000 plus.
Right.
But we're talking about since 2005 to 2019, that period. And we could have moved.
Multilateral debt, you can't just turn up to them and say, give me the money.
Yeah.
Right? But you can go to the markets basically, and it is not tagged to any particular project. There is much less supervision, monitoring, etc. with commercial debt. That's what the gatekeepers like rating agencies, etc. do. That they are just simply trying to see that whether you are good for the money, that whether you can pay the debt back. But if you go to a multilateral, then it is highly specific to a project. There has to be a feasibility study, there is continuous monitoring, there is conditionality. So money comes at higher interest rates, is easier to get, and it comes with an obvious cost.
So now let's talk a little bit about the numbers, Murtaza. I want to speak to Dr. Roshan also about this with regard to Sri Lanka's debt. Now the total repayments for the year 2020 stands at a staggering $6 billion, out of which $4.3 billion is capital and $1.7 billion is interest. And repayments on the international sovereign bonds are about $2 billion, and Sri Lanka development bond stands around $1 billion, and the rest are from multilateral sources. Now, do we have this much of money? Because we know a couple of weeks ago, Ajit Niwad Cabral, who is the Minister of State for Finance, said openly that we have paid a substantial amount of money, and we are perplexed why Moody's downgraded Sri Lanka at a time that we have paid and honored our debt to our commercial agencies. So what is the meaning of this now? 6 billion in debt, 4.3 billion capital, and 1.7 billion in interest payment.
So think about it this way, right? Totally we have about $35 billion of foreign debt, and the average term to maturity is about 5 years.
Right. Okay.
So every every year we have to roll over about $5 to $6 billion in foreign debt. Mm-hmm. Now we don't net generate dollars because we run a current account deficit. And if you take the current account deficit plus FDI, because some of the current account deficit is retained earnings that is not repatriated back, that's why you could add the FDI, we have a deficit of about 1.3 billion. So in addition to what comes due every year, we need to find another 1 billion to 1.3 billion every year to top it up. So we
this
never,
is apart from the 35 billion that is in
no,
debt.
so this is a flow. The 35 billion is a stock.
Right. Okay.
So we generate this deficit every year.
Right.
And we never ever basically generate a surplus to settle our previous debt. It is about rolling over. So it's about convincing the markets that we are good for the money. And that's where people like gatekeepers, like the rating agencies, give their viewpoint, which is a rating, which is a probability of default. How capable are we going forward being able to pay back our debt? And that ability to pay the debt is highly dependent on finding new people who will lend to us, so that we take that proceeds and settle debt that is coming due. So what happened in 2019 is, after they passed a Debt Management Act, we had two sovereign issuances, one that happened in March and one that happened in June. So we had an extra $1 billion that we held in our reserves that we used to settle October. And at the time that we issued that debt in June, the then Governor Kumaraswamy anticipated that 2020 was going to be a difficult year because of elections. He didn't foresee coronavirus coming. And therefore, with an abundance of caution, although it was going to cost us lot more money holding that $1 billion for an extra 1 year, we had it with us.
But Murtaza, now my question is, I know it's rather a political question rather than an economic question. However, on Face the Nation, we speak about politics as well as economy and also other matters. So, are you trying to tell us, or tell me, or tell Nadeem, or Zeenat and Shehan, that there was better economic governance in the previous regime that led to us paying this substantial amount of money, and the present regime is going to put us in a rut next year? Because you say next year is going to be quite crucial and we might land on our face.
So this is how I will answer you, that this crisis basically was in the making for a very long time. This didn't happen yesterday or last year. This crisis was brewing for over 5 to 6 years. So when the new government came in 2015, there was complete chaos in the coalition itself, but at least two parts of the economic management was trying their level best. One was on the fiscal side, to try to run a primary balance surplus so that you had fiscal consolidation going on, which probably happened towards the latter part. In 2017 we had a primary balance surplus after 1955. And on the monetary side, they were trying to stabilize the situation and build credibility. The most important thing was to build credibility. So that momentum was going with us. But unfortunately, we had three misfortunes. We had terrible weather in 2016 and 17. We had 3 failed monsoons. We had a constitutional crisis. And then we had the tragic Easter bombing. All of that significant, there were shocks that slowed the economy down. So the momentum came down. And then we had COVID. So all of that tipped us into this crisis that we are facing. And that was the shocks. That was misfortune. But we had probably 60 years of mismanagement, because as I said, that only 4 years since independence, 72 years since independence this year, only 4 years that we had a primary balance surplus, which means that our revenues was in excess of the expenditure without
So
increase.
can I come to the analogy that the previous government's economic governance system or the structure was well crafted and was well looked after?
They were attempting to do that, but it was, I mean, the expectation was that that was a stabilization exercise. We still were not growing because the economy was slowing, and then the shock slowed us more.
So my question was, why was the economy slowing if they were, having a good economic governance structure at that time?
Well, as I said, there were 3 unexpected shocks, right? But the momentum ever since the end of the conflict, we had two years of very high growth, 10 and 11. But ever since that, because of a lack of what is called structural reform and a lack of productivity-based growth, the economy was slowing.
So, Dr. Roshan Pereira, coming back to you, you've been with the Central Bank of Sri Lanka for a very long time, retired last year, am I correct? Yes, you retired last year. And now you're on the show tonight as a former Director of Risk Management, Department of CBSL, Central Bank of Sri Lanka. So we've seen this problem brewing between Dr. P.B. Jayasundara, who was the Secretary to the Ministry of Finance then, and also the Governor of the Central Bank, who is Ajit Niwad Cabral at that time. We saw when President Mahinda Rajapaksa was making his budget speech, he spoke about exchange control, which is far beyond the budgetary speech that someone makes, but it was crafted by Dr. P.B. Jayasundara, and henceforth you say that he spoke about it also at the budget speech. Now, the Secretary to the President is Dr. P.B. Jayasundara, and most of the time the economic speeches that the President is making is bound to be bounced off. I'm not saying it does, but is bound to be bounced off Dr. P.B. Jayasundara as well. And then you have the former Central Bank Governor who came to the national list of the country. I'm trying to figure out, does this mix work? Now, you've been in this system for a very long time, and I'm pretty sure that you can answer this question now, as now you are out of the bureaucratic Central Bank of Sri Lanka at one point. So does this mix work, or will there be a tug of war between these two to show their might as far as economic governance is concerned? And then I will ask a question to you about, my follow-up question would be also related to that. Yeah.
So I think, I mean, I can't directly answer that because I don't know the dynamics that are in play at the moment. But what I would say is definitely there needs to be policy consistency.
Right.
And I think that's what Murtaza also sort of alluded to just a little while ago. If there is policy consistency, particularly between the fiscal policy and the monetary policy, is very important.
Right.
You can see that in any country. If there is no coherence between the two policies, there can be a
right. So
fallout of the economy.
now, in your opening remarks, you said that debt to GDP ratio is not something that we have to look at, but what we have to look at is the ratio to debt, ratio of debt to government revenue. Am I right? To
debt service to debt.
Right, service to debt. Right. So, based on these numbers, Sri Lanka is close to 900% on ratio of debt to government revenue. 900%, far above the B median of 350%. So.
Yes, so I think here what
So
we
now
need
there is some sort of a contradictory statement, isn't it, there? So Sri Lanka is anyway high in terms of our debt to government revenue as well.
Definitely. So, and I think here, because when we talk of debt, we are talking of something that has happened in the past, really, and that is something that has to be addressed. But it's something you're almost backward looking. We really need to look, in a sense, in the future. And one of the things that we need to look at, and why we have come here, is because of our inability to raise sufficient revenue.
Yeah, but Murtaza just said, Dr. Roshan, that the multilateral agencies like ADB and World Bank and even IMF will not now be in a position to help Sri Lanka, because it is not going to come just like that. It's going to come with regulation. It's going to come with stringent measures that should be taken as far as the country's economy is concerned. And you have to move to commercial debt hence. And it's important to speak about the past. Why, if we are to reflect on the future, we have to arrest what happened in the past and then reflect on the future, isn't it?
So definitely, in the sense that we have to address the debt issue, it's not going to go away. But my point is that while we address the debt issue, we have to look at the future, because the country has to continue to grow. Country has to continue to, the government has to continue to service its other contractual obligations, like its salaries and wages for its workers, the interest payments, and whatever the welfare payments. And for that, you have to raise sufficient revenue. And my point is actually that we need to be looking at how do we increase our revenue, because in the future that is going to be the way out of this debt sustainability, or the lack of debt sustainability. Currently, in this year, actually, our revenue to GDP is going to fall below 10%, which is very low even compared to our regional peers.
So signing the MCC, is it prudent right now? Because there seems to be a political tug of war. One section of the government is saying we don't need the MCC. Some section of the government is saying if it's amended, we can look at it. In your opinion, do we need it?
Well, we need whatever funds we can get.
We need money.
We need money, exactly.
Yeah.
But obviously, I have not looked at all the conditions. I have not looked at all the sort of the fine print of the MCC. So you obviously need to look at what is in it. But definitely, we need whatever money we can get at the cheapest price.
Yeah, Dr. Roshan, because now when Murtaza spoke about this elephant being in the room, that is debt, I also want to speak about the white elephant projects that was carried out in the last few years using commercial debt, like cricket stadiums in jungles were built, ports were built using commercial debt. So with this government now in play, we've seen the history of this government in play for a very considerable amount of time as well. Would we see something of this sort again, moving towards commercial debt and building infrastructure, building highways, and then putting us further in the trench and keeping the people right at the ledge and expecting the people to salvage once an election is around the corner?
So I can't second guess what the government is going to do in the future, but as an economist, what I can say is that if we want to maintain our debt sustainability in the future, we need to look at, because we will have to borrow. I mean, there's no question that we will have to borrow in the future as well. But we need to know what that debt is being used for. Is it going to be generating long-term value? Is it going to be generating revenue that will help to pay off that debt? Maybe not immediately, but in the future. So there needs to be a definite focus on what is the debt being used for. You have to look at who holds the debt. You have to look at the current composition of the debt. There are a lot of the maturity profile of the debt. So for future debt sustainability, since we are going to have to keep borrowing, we need to have all those in mind. So I think as economists, I mean, that's what we can say. We can't really second guess.
Janta, interestingly, when the president made his announcement today to those who were summoned at the presidential secretariat, he said that I will not close down the country. I will always make sure that the country's economy is moving and then fight the coronavirus pandemic. But we've seen in other nations, like let's take Melbourne for an example, was closed down for 120 days. London is also now on the verge of being locked down again. In a situation like this, what must the government do, and what is your expectation as an exporter, because you're also on the tea industry, being a private exporter? So what is the expectation from your side to the government? Is it a lockdown? Is it, let's think about the people's health first and then move towards recovering and getting our nuts and bolts into play? What is your thinking?
No, we always maintain we should not go for lockdowns. We should find a way of working with we have to live with it. We can't close, the factories or companies or productivity centers. So we need to work. But the problem of this Brandix was very unfortunate, and after that I think the industries have learned how to manage this. So we should have discipline with the people. Actually I think a lot of people are aware of it, the danger of having this, and I think we should not focus too much on that, but we must focus what is needed now is country to produce more and to earn more money. But we have to take all precautions, health aspects, we have to look at it. But I fully agree with the government. We should not lock down, we should work, and we must increase our productivity. We can't go on like this, because we have to find a way of increasing our revenue for the country.
But what is the ultimate goal? Is it the economy or is it the health of the people?
No, both has to go hand in hand. But can you remember in March or April when they locked down, people were shouting, let us even, we have to work, we have no money to eat. I've seen this especially on TVs, they didn't have way of working to earn money. So I think we should not go for that again, because we are not a country we can, like in Australia or in UK, to give handouts to people. So we are not so rich. So we have to find a way of working, taking all precautions. So I think that's the way to go. The exporters always maintain that we need to work, but we are careful. We will take all precautions. Now people have got used to it. So we can, if you look at the recent the spread of virus, it's not from the factories, other than those that Brandix thing, but it's not from the factories, from other places. So I think we have to keep doing our things which are giving productivity to the industries.
Mr. Jaffarji, the non-banking financial sector has declined to a 5-year low as of March 2020. So how are the import restrictions on vehicles going to affect the non-banking financial sector?
Yeah, so if you take vehicles, this is a sector that is significantly driven by financing. that if you take cars, it's about 60 to 70%. There were times when it was even higher. Even things like two-wheelers, it's 70%. And when there is a restriction on vehicles, that means it is going from motorcycles to lorries. Entire categories have been stopped. It's not only cars. So obviously there has been a complete slowdown, and unfortunately the vehicle statistics are not available for the month of September because RMV itself was closed. And then I don't know what has happened in the month of October, but I can say that it has significantly slowed down. So what's happening to most of these NBFI companies is that they have to keep issuing new leases, because every month so much gets paid back, that many of their loan books will start contracting going forward. And in the second hand market, the prices have increased, so they have a bit better collateral cover. And once these moratoriums come off, you will see that there is some element of stress. But up to 30th September, from what I heard, they were okay.
Also, Mr. Jafferji, the World Bank predicts Sri Lanka's economy to shrink by 6.7%. Then the ADB predicts somewhere around 5.5%. And then the Central Bank recently predicted a shrink of 1.7%. So, it's do you not think that the Central Bank is not being prudent enough?
So these projections, Zenith, were made before the second lockdown, right? So the World Bank prediction, I don't know whether they factored in the second lockdown, but certainly the forecast came a few months ago. Now our government was debating that their forecast was more realistic. If you look at high frequency indicators like Google mobility data, etc., it is very clear that there has been a significant slowdown. So even if you look at the last 2 weeks, I mean, the level of activity is similar to the first lockdown in March to April. So my sense is that the actual number will probably be closer to the World Bank figure than the government's figure.
So you have a question, Murtaza, from one of our viewers, Srinath Fernando. His question to you is, when Argentina went bust, the creditors started dictating terms to Argentina to restructure the economy to enable Argentina to honor its overseas debt commitments. If there are adverse economic surroundings, will Sri Lanka lose its elusive non-alignment tag and would instead be permanently aligned to its creditors, mostly Chinese banks? What is your take on this?
So Sri Lankans are eternally optimistic that we believe that there will be a messiah who will come and bail us out. I'm sorry that it will be only a trade in hope that it's the casual conversation is the Indians will bail us out, the Chinese will bail us out. Actually, when you look at the history of Chinese lending across in other countries that have much more mineral resources than us, you look at even countries like Zambia, which is on the verge of default, Chinese are not bailing them out. You may get some liquidity support to the central bank, but that's again only very short term. So the thing is that we have to build credibility to the markets that they give us time, and I feel that some element of reprofiling will be necessary, which means that it's a moratorium at a national level. We need time to come out of this, and probably we need 2 to 3 years where we can freeze some of our overseas payments so that we get time to recover from this. And getting creditors to agree to that is going to be highly dependent on whether they think our restructuring plan is credible. And that would require us to put a better tax plan, that we need to get our tax to GDP when the economy recovers closer to 14%, which we have never achieved in the recent past. But 22 years ago in 1998, our tax to GDP was close to 20%. So there is no reason that we can't get back to a 14-15% if we do some basic adjustments to our tax policy and better tax administration.
But the government is hellbound to please the public, Murtaza. They are not hellbound to salvage the country's economy. And you saw that happening. You saw the taxation that was imposed on VAT was reduced. The slabs of income tax was changed.
I don't understand. I mean, just to give you a data point, our minimum tax threshold is at 3 million rupees. It's higher than the threshold of Australia and Singapore. whose income levels are probably 10 times ours, you know. So as a ratio, ours is 420% of per capita income, while in those countries it's 20%. The issue here is it is not about appeasing the public, because almost close to 50% of national income is owed to the top 20% of households. So, you know, any kind of tax plan in this country is about going after that top 20% of households. So I never could understand why you can't go after the rich.
Mr. Jakarji, so once during a forum you said that Sri Lanka's debt is about 10 to 11 trillion, which is about 82% of GDP, to which another 5 to 6% owed by SOEs should be added to make up the total liability of the country. So is it still the same figure, or has the losses increased?
So Zeenat, to put that, at the end of last year, our debt was 13 trillion, our economy was 15 trillion, right? So I'm expecting that at the end of this year, our economy will be 15 trillion in nominal terms, or slightly lower. But our debt will be close to 14.5 trillion or more, right? Because the tax revenue has come down and the expenditure continues. In addition to that, about 5% of GDP is basically in terms of guarantees that have been given on debt that has been lent to the road development authorities, Ceylon Petroleum Corporation, and a few other SOEs, which also has to be added to the central government debt. So if you take a public debt, it's a bit higher than that figure.
Many say that in order to reform your state-owned enterprises, you need to privatize, but then there's also opposition against privatization. So do you think there is a sort of a plan that Sri Lanka could follow to reform these state-owned enterprises without privatization?
Well, if you look at the two big ones, which is the Electricity Board and the Petroleum Corporation, what is necessary is for them to increase their prices. That they are pricing themselves. Recently it's okay, Ceylon Petroleum Corporation is okay because the oil price has come down, although just before this the price went up 10% simply on this vaccine news. It's an issue of passing on the prices. In the case of electricity, you know, the last price revision was in 2014 and inflation has gone up by about cumulatively about 30% in this last 6 years. The electricity tariff has not been revised, and the cost of generation is between 1950 to 23 rupees. So you are losing between 3 and 5 rupees a unit of electricity. I don't know what it is this year, maybe it has come down because oil price came down, on about 15 billion units of electricity. So the first thing that they have to do is that to make the tariffs or the tariffs a bit cost reflective. That is where I would start.
One more question, Mr. Jaffarji. So in the 1930s, I'm referring to the Great Depression. So 6 months after, I think, the 1929 stock crash, so the US government imposed restrictions on imports, and as a result unemployment increased to more than 20%. So do you think that such a situation may occur in Sri Lanka as well because of the import restrictions?
So this protectionism which happened at various points where there is a crisis, that is a knee-jerk reaction that, you know, if your economy is in crisis, then you try to stimulate your own domestic economy by taking out imports so that you shift demand domestically. My sense is a small country like Sri Lanka has to look outwards. It cannot afford to look inwards. So that is not the right remedy. Our remedy is looking outwards and focusing on improving productivity within the economy. So unless we allow competition to come, productivity will never improve. So the question that Shamir asked me right at the beginning about the stock market is, and I said that there are companies that are making record profit. Even if you look at some of the building materials industries, right, controlled by very few people, they are all oligopolies or almost virtual monopolies. At the margin, the competition, the contestability comes from imports. Now many of these items the government went and said ban, we are not going to allow imports. Guess what happened to the profits of the domestic companies? They have gone to record levels, and at whose cost? It's coming at the cost of the consumer, because basically you could have enjoyed lower prices, you are ending up paying higher prices.
Mr. Karunaratne, if I could just come to the comment that you were making earlier about lockdowns, and you said that that's not the way. Now, curfews have of course affected the manufacturing sector because you're talking about less manpower. So now we have a new normal and we have a health guidelines that have been issued. What is being done by exporters such as yourself, National Chamber of Exporters? Is there a clear communication being made amongst exporters to adopt these health guidelines? Now you can only have a limited number of people in a room. You can only have, you have the social distancing and all these things, which of course affects how operations have been run all this time. So is there a clear mechanism or a system that's going to be put in place where there's no confusion, the public is not suspicious of who is following these guidelines and who's not? What is being done?
No, all companies follow health guidelines. Even, yesterday they announced lockdown in certain areas in Sri Lanka, especially the tea areas. So when we checked what the police said was, we contacted them, we said you all can work, but you have to follow 100% health guidelines. And also they said that they have appointed a team to come and inspect factories. So, I think everybody, as far as I know, all follow much more than what is required by the health authorities. They follow because, more than the health authorities, the companies are scared. They don't want to close down or have problems.
That's a very interesting question that Shehan asked you, Jayanta. So what happens if there is a suspect? And how would the people know that these individuals who are coming to work are not suspected COVID patients?
No, there is no guarantee. We check them, like checking fever and things like that. But moment we get to know that they are infected or we have seen...
What is the protocol?
Normally what we do is we check fever, maybe 3 times a day we check fever. But, sometimes people don't have fever. But still
they become asymptomatic. Yeah.
Yes. So, what we do, moment you suspect or even we suspect a person is coming from these areas, certain roads, we stop them coming. We tell them, okay, we will pay you something, but don't come to work. We will continue to pay your salaries, but don't come to work because we have to take the risk, to close the section or maybe go for all tests, things like that. So most of the companies are very careful, they follow.
Because the social dilemma now surrounding even Brandix for that matter. Brandix has played a very big role as far as the country's economy is concerned, as one of the forex earners in the country. But the social dilemma or the stigma that is surrounding the company right now is not that great. It will take years for the company to come on top. So people may look at the exporters also in that view, thinking it is because of X company that this is spreading, and henceforth they have a fear that because individuals are coming in from isolated areas, there is a risk of them contracting the virus as well. So how can you answer them, those individuals who are even watching the show tonight, who will be thinking the exporters are only thinking about themselves and only about their profits, they're not thinking about the health of the people?
No, we don't think like that. Actually, they must understand why. Because we are working, we are open, they at least earn their salaries. There are people earning monthly salaries, daily wages. In most of the companies, we don't force people to come to work. If they don't want to work, they can stay away, they can stay at home.
And you still pay?
We still pay because we know it's a temporary thing and we don't want to take the risk by asking or forcing them to work. But I feel that we are doing a service, by getting, a lot of people come to work. They want to work because they have to earn money. There are so many, thousands of families living on these companies.
So what about the tea industry, Jayanta? What has happened to the industry as a whole? Because I just want to get a feeling from you, because many are thinking that the garment sector has been affected. What about the tea industry? Is there a fear among the tea drinkers globally to buy tea from Sri Lanka, because now Sri Lanka is on that second wave? Has that affected?
No, compared to most of the tea drinking countries, we are doing much better. We have had only 35 deaths. In Iran, it's about 1,000 deaths per day.
Per day?
Yeah, in Russia also much more than that. So comparatively we are doing very well. There is no problem of COVID, but only problem we have is most of the markets are, they have currency issues, they have economic issues, they find difficult to pay. So those are the issues we face. The ruble has depreciated a lot, Iranian riyals, the Libyan
But
currency.
has the industry seen a boom compared to last year?
Tea industry has earned more money this year. The export of tea has earned more money, though we have exported less quantity. The quantity less
There is
because
a 2 million drop in production as well.
in about 10% of production. But we have earned more dollars into the country because the tea prices have gone up. So there is no income-wise we are greater, higher than the last year. But most of the countries buy from tea are doing,
What about the margins of these exporters? You say that the prices increase. The price may increase because of numerous reasons, because the weather is not right, because there are no pluckers, ample pluckers, because of COVID-19, because the demand for Sri Lankan tea goes up. But what about the margins? Is it enough for the exporter to survive?
The producers have made a lot of money this year because they have made less.
Producers made a lot of money last year as well.
Yes, they have made a lot of money this year because they have produced less. The expenses are less, but they have earned more. But the exporters' margins have come down. So definitely the margins have gone down because most of the export markets don't increase their prices. They maintain.
It's blocked for the entire year.
Yeah, so you cannot increase prices.
Right. Dr. Bilisha, you've been a bit silent for a few minutes now, so I'm going to pose a question to you. First question is, what was Sri Lanka's remittances in the year 2019?
6.7 billion US dollars.
6.7 billion. So that is 300 million less than 2018, because 2018 the figure stood at 7 billion. End of 2020, where would it stand? Up to now, do you have a figure in mind or a figure that is out so far?
It's hard to say, Shamir, because now we said something in April and then we are saying another thing in October.
Now this time you can have a crystal ball in front of you
No,
and
there
predict,
is-
I'm not going to hold you responsible for that.
No, you can't hold me or the central bank or the World Bank because it's so dynamic and there are so many different players coming in, different scenarios playing in. So
But when you
hard to
look at the share of value of remittances by district, we saw in 2018, 2019, most of the number came mostly from the Western Province, that is from the Kalutara district. However, Jaffna, Kilinochchi, Mullaitivu, and even Hambantota district recorded a significant number as well in terms of remittances from foreign nations. Do you see this increasing, or must we take an advantage in terms of these figures that are out? Can we take an advantage as a country?
you mean the geographic
Absolutely,
distribution?
yeah.
Yes, because we have to understand these remittances coming in numbers do not really match with the migrant workers going out numbers from
Okay.
those districts. So it shows that it's not the true migrant workers that might be going out that is sending. So we have to understand that there is a wider clientele remitting to Sri Lanka. So understanding that, we have to see kind of, number one is we have to try to understand who's remitting to Sri Lanka. So now this situation also we see it's not the regular migrant worker who's remitting. So if we figure out that, maybe we can tease out more remittances to Sri Lanka in the long run as well.
So I've been asking a lot of political questions from Murtaza, Jayant, as well as Dr. Pereira. I want to ask you also somewhat of a political question, Dr. Bilisha. The government has a nationalistic rhetoric. This government has a nationalistic rhetoric about making sure that the people live in Sri Lanka, find employment in Sri Lanka. Let's build factories. Let's make sure that Sri Lankans are at home and not overseas. And very nationalistic sentiments were expressed during the campaigns that we saw, the presidential campaign and even the general election campaign. We saw this nationalistic rhetoric coming into play, saying we want Sri Lankans to be at home. Why can't we build factories in the country? Now my question to you is this the way you envisage Sri Lanka in the next coming couple of years to have a homegrown solution for the employment problem faced by the Sri Lankans, or is this just a rhetoric just told because of an election?
First, if I'm not mistaken, there was a nuance in this political campaign saying that we will send better skilled people and get more remittances. I can't really remember, I think they said something like that. And then the other thing is, my personal view is, this is a global era. You just can't look closed at your economy and just think that you're going to have all your people within the country. There is more comparative advantage if you try to bring in more skilled people for certain jobs from outside and send our people to certain other jobs overseas, and then the gain might be more. Because the trick is, you should not lose the people who are going out of Sri Lanka forever. You have to have a mechanism where you keep them in the loop with the Sri Lankan economy and get them to remit in money or in terms of social remittances, or there are so many ways, but to keep them connected.
But Dr. Barisha, you just mentioned before as well that most of the skilled workers who are going out of the country settle in those countries. They don't come back.
They don't have to come back to contribute to the Sri Lankan economy. There are many ways they can contribute. They can, in many countries, the FDI is channeled through these migrant workers who have settled down in other countries. They might be working in big companies, holding higher up positions. They are in a capacity to influence the company to send FDI, or in many ways to reconnect with their country of origin. So they do not have to come back physically, but there are ways that they can contribute or be engaged with their home country.
Dr. Veeraratne, you said something very interesting earlier. You spoke about repurposing of skills. In light of what's going on right now and in this COVID world, how can we repurpose people's skills? What needs to be done? For the longest time, I've known people would complain about our migrant workers going, for example, unskilled migrant workers going and working as housemaids. So is there not an opportunity here to change that way of thinking? What needs to be done?
I think that way of thinking is kind of changed already. So now, more than sending female domestic workers as domestic workers, there is a momentum to skill them a little bit and send them as care workers, where they are paid more and recognized a little bit more. So even for people like in the construction industry, they're trying to give them more skilled certificates so that they are recognized and they can earn more. It is happening in a way, but maybe, as you said, right now it has to be done in a more systematic way, understanding where the future demand is. Now, looks like we might have a large pool of people looking for jobs here. So one thing we could do is maybe train them, prepare them for the jobs that might be available in another 2 to 3 years time, and get them that skills certification and have them ready to redeploy once things improve.
Because for many of them, all they know is being a housemaid, particularly those who are out of Colombo. So there's a need for communication, isn't there? Is there a proper mechanism where they are being told, this is now another option you can take?
But in light of this COVID-19 situation, I don't think female domestic workers are as destabilized as the other skill groups, because they are working in households and they are less likely to be unemployed because of this pandemic. It's so in a way they are in a kind of a secure position right now, but it is the other segment of workers who are working for big companies or places where they can afford to lay them off, because in a household it's unlikely that
so
they
I
will
want
lay them
to
off.
wrap up, but I'll give Zeenat an opportunity if you have any questions from the panelists.
Dr. Roshan, do you think the government's policy response to the pandemic has been effective?
So I think going into the pandemic, the fiscal response, I think in many countries, the fiscal response was what really mattered, not mattered, but was important, because this shock that what we experienced is not really an aggregate demand shock. It was a supply side shock. So even though we had the space in the monetary sector and we did a lot of monetary policy measures were were taken, there needed to be also a fiscal response. But unfortunately, because of the fiscal constraints, the country was not able to give as much of a fiscal stimulus or fiscal package as many of the countries even within our region. So in that sense, I think we were not as effective in that sense. And that is where again we come back to the fiscal sector, where we really need to, the government really needs to enhance its resource envelope, because we are going to be facing challenges going forward. This is not going to be the end. So if we are to face those challenges successfully, I think we really need to have that fiscal space when the necessity arises, we are able to jump in and do what is necessary to keep the economy at least in balance.
So before we go into a short commercial break, one question for Murtaza. Murtaza, we saw prior to the election, when there was a lockdown, the government gave a rebate on the electricity bills of those in the country, because the entire country was on lockdown. So in the Western province, there was a week-long lockdown. Do you think the government this time as well would give a rebate, because there is no election for sure? Are we going to see some magic wand dole out packages for the country in the next few weeks if the lockdown continues?
So from an electricity rebate perspective, they gave it to the lower income households. I mean, already basically electricity to those households, when the higher income households, higher usage households have to pay 45 rupees a unit. These households are being given electricity at 3 rupees and 6 rupees and 9 rupees. So there is a huge subsidy already built into that, and giving further this thing doesn't make any sense, because these people are spending on other things. It's about prioritizing what you spend for. So if you give out more and more handouts, basically, how are we going to pay for it? That is my biggest concern. And when we have such a crisis on our hand, with already the central bank having subscribed to something like 500 billion in treasury bills, because the government can't find any other source of financing, there is going to be a limit unless you go on printing more and more money, and then invariably that will end up with inflation, which is a far worse outcome.
Right. Thank you very much, the two gentlemen and the two ladies. We go in for a short commercial break. When we come back, it's the final round. We speak about the country's economy in light of the second wave of attack as far as COVID-19 is concerned. Stay connected, stay with Face the Nation. We will be right back. Welcome back. This is Face the Nation. We start off the final round with Jayant Kararatna, Vice President of the National Chamber of Exporters, as well as the Chairman of the Colombo Tea Traders Association. So I'm going to give all four of you 3 minutes to sum up. Do not bring in new arguments in the conversation, because I'm pretty sure, because you're economists and experts in the field, there won't be any new arguments in the final round, so I don't have to cross back and forth from moderating this debate any further. So I'm giving you 3 minutes as your final remarks on this show on the topic COVID-19 and the state of the country's economy, second wave. Your time starts now, Jayant.
Yes. We as exporters, we believe that, we should continue to work, and, we can bring in more money. We believe, now we know that we have to pay $35 billion within the next 5 years. What we believe is that we have to increase our productivity, our exports, our income. So, each sector, if you can bring in maybe 10% more, we can bring in about $1 billion more for a year. So it is reachable. And also for us to do that, we need to, cut down certain costs, especially those waste. In our business environment, there are a lot of waste. you know, we you know, the unnecessary blocks, you know, the regulators. So if we can remove them, definitely the export sector can do better. So bringing additional 10% or maybe additional $1 billion from export of products, or you know, this not without services, will definitely give us a little more money to the country to settle this. So these are all possible. We should work. We must reduce cost by removing especially waste, and to be little more innovative, and you know, we should be able to do, and we can manage the COVID. I think you know, we are taking a lot of precautions, but if you look at most of the other countries, you know, they don't take a infected person immediately to a hospital. You know, they try to treat them at you know, their houses, and if it's bad, those people are taken. I know some certain people in other countries, they have infected, they have stayed at home for 2 weeks and then gone back to work. So actually I think this has to happen here. So you know, everybody, all are not sick. You know, they get some symptoms, and you know, it goes off after few weeks. So I think we should follow that kind of thing, not to waste money by taking them to a hospital and you know, spend 2-3 weeks in a hospital. But we must take all precautions. But I think there are a lot of waste we can control. We can increase our productivity, we can increase our turnover, and we can bring in more money to you know, to settle all our debts in the future.
So Jayant, you are saying to adopt a system like Dubai, for an example, where when you go from a country to Dubai, you do a PCR test at the airport, and if you are positive or negative, if you are negative, you are allowed into the country, but if you're positive, you are being quarantined for 14 days, and then do a PCR test, and then you can go back to the country.
Yes,
so
correct.
have a similar system in Sri Lanka as well.
Now in Russia, you know, you get people living, you know, if they get you know, infected, what will happen is they are asked to stay at home for 2 weeks. After 2 weeks, they do a test again. But you know, if you are sick, they take you to a hospital. If you are not sick, you are at home, you are quarantined at home. So I think that's a method.
But the problem is, Jayant, you know, people are trying to even make from the antigen kits that have been brought to the country, unfortunately. Anyway, moving on to Dr. Bilisha Veeratna, Head, Migration and Urbanization Research, Institute of Policy Studies.
So a couple of things to focus on is, one is to retain the jobs that we already have with our migrant workers overseas. So to do that, we have to make sure that their passports are renewed on time, whatever the documentation they require are provided to them in a timely manner, so that their contracts are renewed, their work visas are renewed, so that we are sure that they will not be laid off unnecessarily due to our mistakes or our lapses. And the other thing is, keep the people who are already trying to go out in that momentum, make sure that their skills are at the peak, and not that they are going to forget what they have learned during their training or whatever the certification that they have got, so that they can be redeployed as soon as there are opportunities. And the third thing is, we have to figure out a mechanism to take care of our returning migrant workers, because many have indicated, like 35% have shown that they want to go back again. So for them to go back, we have to make sure that there are mechanisms to go back, there are jobs, their skills are matched to the available jobs. And also those who don't want to go back, we have to make sure that we can reintegrate them into the Sri Lankan economy, to the Sri Lankan labour market, and also take care of their families in terms of social security if it is required for them.
Thank you very much, Dr. Bilisha Veeratna, Head, Migration and Urbanization Research, IPS, Murtaza Jafarji, Chairman of Advocate Institute, and also JB Securities.
So to me, as I said, the elephant in the room is the debt crisis, and it is about us recognizing that the crisis at hand is one of insolvency, and it is not a liquidity crisis. So the salvation is not about finding new pots of money to pay back some different pots of money, but to confront that we have a serious solvency crisis and take steps how we are going to come out of it. We can't simply grow out of it. It will require some element of reprofiling. And the second thing is that after we do this, and once in order to build credibility with the markets, we have to get so market outcomes to work in an economy. Now we are looking at China to be an example, and I urge anybody who's listening to me to go and look up Joseph Stiglitz interview, who is a Nobel Prize winner and was the head of the World Bank, and he had advised the Chinese government even in the early 80s during their opening up. He said, look, the Chinese system is a social market economy with Chinese characteristics. And the key thing he said about the Chinese is they were pragmatists. They are not ideologues. They are not anchored by a particular ideology. They are willing to try different things. And ever so often, over a period of time, they change their model because they know what worked previously is not going to work this time around, and you're going to try something new. So I would like to end by saying this, that something that was attributed to Einstein. He said the definition of insanity is doing the same thing over and over again, expecting a different outcome. So we are going back to policies that we have tried previously that has not worked, and it is pure insanity to keep trying those same policies once again, expecting a different outcome.
Very quickly, Murtaza, I want to pose a question to you before moving to Dr. Roshan Pereira. During the break, you said some interesting remark. If I may quote you, you said that since 1948 to 1988, Sri Lanka's debt was at 1 trillion, and now we are adding 1.5 trillion every year. Am I right?
So it was up to 1998.
Okay,
the cumulative debt up to 1998 was 1 trillion. So the first 50 years since independence we had 1 trillion, and this year alone we will add 1.5 trillion. The caveat is that it's not the same rupees because we have depreciated, so the real value has come down, but in nominal terms, unfortunately, that's what the maths is.
Right. Thank you very much, Murtaza Jafarji, Chairman of Advocata Institute, Dr. Roshan Pereira, a former Director, Risk Management Department, CBSL.
Yeah, so what I want to say is there's a saying which says never let a crisis go to waste. As much as crises have challenges, I think there are also opportunities for countries or economies to address the vulnerabilities in those economies. And one thing I've been stressing is in terms of building buffers. I talked about creating the fiscal space. The lack of fiscal space prevented the government from responding to this pandemic in the way that they probably would have liked to. And I would like to take us back to the East Asian economies. And if you look at how they responded in crises, so if you look at the Asian financial crisis, they after the crisis, they put in a lot of measures to strengthen the financial sector. There was a consolidation of the financial sector. They boosted their foreign reserves because that was another area that they suffered in relation to. And because of the buffers that they created, it helped them to withstand a lot of what happened in the global financial crisis and to recover more quickly than many other countries that were affected. Same with the SARS and MERS epidemics. Because they went through that, they created a response playbook, which they were able to basically unroll in this COVID-19 pandemic. And as a result, they were able to bring this pandemic under control much better than in many advanced countries even. So my point is basically we need to build buffers in good times. This may not be the best time to build the buffers, but these are things that we need to keep in mind, because sometimes we forget when good times are there, we basically forget about the fact that there are cycles, and we need to build these buffers in good times so that we are well prepared when we face the shocks.
Have you ever had a good time?
Well, there have been good times. I mean, there have been where we haven't had these kind of shocks, and where we could have built certain buffers. So I mean, particularly in the fiscal sector, we have had opportunities. So I think we really need to think about the fact that this is not going to be the last of the shocks. There will be other shocks, and that we need to be well prepared for them. So I think that's one thing that I'll...
Thank you very much, Dr. Roshan Pereira, former Director, Risk Management Department, CBSL, Central Bank of Sri Lanka. Thank you very much, Jayanta Karunaratne, Vice President of the National Chamber of Exporters, as well as the Chairman of the Ceylon Tea Trade Association. Also joining us tonight was Murtaza Jafarji, Chairman of Advocata Institute, as well as Dr. Bilesha Veeratna, Head, Migration and Urbanization Research, Institute of Policy Studies. Thank you very much, Nadeem. Thank you very much, Zeenat, as well as Shehan, for joining us this evening on the show. It was always a pleasure to hear your posed questions to the panelists. I leave you tonight with a quote, as I always do, this time around with a quote from Joseph Stiglitz. Development is about transforming the lives of people, not just transforming economies. Take care.